Welcome to our deep dive into Cholamandalam Investment and Finance Company Limited.
CIFCL.
Yes, CISCL.
Yeah.
We are going to be looking at their investor presentation for the quarter that ended December 31st, 2024.
Right.
So this is kind of your shortcut to understanding how they're doing, what their strategy is, and where they fit in the financial landscape.
Yeah, and their growth.
Exactly.
How they've grown over time and what their potential is for the future.
So before we get into the numbers and stuff,
Right.
let's take a quick look at the Murugappa Group,
Okay.
which is the parent company of CIFCL.
Mhm.
They have been around for over a century.
Wow.
They have businesses in everything from agriculture to engineering.
Mm-hmm.
But for our purposes,
Yeah.
the most important piece is their financial services sector,
Yeah.
which has a market cap of 1.26 lakh crore
Yeah.
and a profit after tax of 3,923 crore.
So CIFCL is part of a financially strong family.
Exactly.
Gives them access to resources and expertise, and that will contribute to their stability and potential for growth.
Okay, so strong foundation.
Yeah.
Now, let's focus on CIFCL itself.
Right.
Their mission statement is helping customers enter a better life.
I like that.
But what does that actually look like?
Right.
Well, for starters, their customer base has exploded from 3.5 lakh in 2010 to over 43.9 lakh today.
Wow. And their staff has grown too.
That's what I was just going to say.
Oh.
They had about 980 employees back in 2010.
Right.
And today they have over 64,000.
That's amazing.
Huge jump.
Yeah.
So it's like they've grown alongside their customers, which is really impressive.
Yeah.
And speaking of impressive, their market cap has skyrocketed from 623 crore in 2010 to over 99,000 crore now.
Wow.
Plus, their pre-tax return on assets sits at a healthy 3.2%, and their profit has grown at an average rate of 48% every year for the past 15 years.
That's incredible.
It is really impressive.
And they're all over the country too.
Yeah, their geographical reach is really incredible.
They operate in 26 states and 7 union territories.
Yeah.
With a whopping 91% of their branches located in Tier 3 to 6 towns.
So it seems like a very deliberate strategy to target a broader market.
Yeah, particularly in semi-urban and rural areas.
Yeah, it's like they're bringing financial services to people who may not have had access before.
Right.
But this kind of growth doesn't happen overnight.
No.
CIFCL's journey has some key decisions and strategic expansions.
Okay.
So, for example, they started with equipment financing
Okay.
back in the day, then moved into vehicle finance, and even launched their own securities arm.
Oh, wow.
They even had a joint venture with DBS Bank for consumer finance,
Interesting.
which they later decided to exit.
I wonder why they made that move.
Yeah, it makes you think about what their strategy was.
Yeah. Was it a strategic decision
Right.
based on market analysis, or was it a response to changing economic conditions?
Or something else entirely.
Right.
It's like every decision gives us a clue about their strategy.
And risk appetite?
Yeah, and they adopted technology early.
Yeah, they were early adopters of technology.
They launched a mobile app back in 2011
Yeah.
and implemented AI and machine learning for credit scoring.
Wow.
So ahead of the curve.
Yeah. And they didn't let the COVID-19 pandemic slow them down.
I was just going to say that.
They continued launching new loan products,
Yeah.
expanding their reach.
Mhm.
By 2025, they're projected to have a massive 1.89 lakh crore in assets under management
Wow, that's a lot.
and over 1,577 branches.
It seems like they're not afraid to embrace change
Yeah.
and adapt to new challenges.
It definitely seems that way.
But before we get too carried away with the excitement, we need to look at their financials
Yeah.
to see if this positive trend is sustainable.
Okay, time to put on our analyst hats
Right.
and crunch some numbers.
Let's do it.
Let's start with their recent performance in the third quarter of the fiscal year 2025. Their disbursements continued to grow in most segments.
Loan against property and consumer and small enterprise loans leading the pack.
Now, loan against property is a very interesting area to focus on.
Yeah.
It can be a bit riskier than other loans,
Yeah.
especially in a fluctuating economy.
Right.
But it seems like CIFCL is managing that risk well.
Yeah.
They're catering to the growing demand from small and medium enterprise customers
Okay.
who often need that kind of financing to grow their businesses.
Their AUM also saw significant growth
Okay.
across all segments.
So they're attracting more business.
Exactly. And their net interest margin has been steadily improving.
So they're managing interest rate fluctuations pretty well.
Yes, they are.
But the question is, can they keep that up?
That's a great question.
Can they maintain that momentum in the long run?
Now, their profit before tax is showing a healthy growth,
Okay.
so that indicates strong earnings potential.
So,
But there are a couple of things that raise a little flag.
oh,
Their stage 3 loans,
oh,
the percentage of loans that are overdue by more than 90 days, ticked up slightly.
this is something to keep an eye on.
Yeah, while a small increase isn't necessarily alarming,
Right.
it could be an early warning sign.
Of potential issues with loan repayments.
Exactly.
Yeah.
We need to investigate what's driving that increase and how CIFCL is managing the risk.
Okay.
Similarly, their GNPA and NNPA
Right.
also saw a minor uptick,
Okay.
though they're still within acceptable limits. On the plus side, their capital adequacy ratio is comfortably above regulatory requirements,
Right.
which means they have a strong capital buffer.
To absorb any potential losses.
Yes.
So are these numbers a sign of continued success?
Right.
Or are there challenges lurking beneath the surface?
To get a clearer picture, we need to take a closer look at each of their business segments.
I agree. Let's start with their flagship product,
Yeah.
vehicle finance.
This segment is deeply connected to the overall economy, consumer spending, and even technological advancements in like electric vehicles.
It's fascinating.
Yeah.
So dynamic.
Yeah. What's the story with CIFCL's vehicle finance division?
Yeah. Ton of more.
Their disbursements are still strong,
Okay.
but they are starting to show signs of slowing down.
Yeah.
They have a wide range of products,
Yeah.
from new and used cars and trucks to two-wheelers
Yeah.
and commercial vehicles.
And remember their focus on smaller towns
Right?
and rural areas.
That plays a big role in their vehicle finance strategy.
That's really interesting.
Yeah.
There's huge potential in those underserved areas, especially as incomes rise
Yeah.
and people aspire to own vehicles.
Right.
But it also comes with challenges,
Right.
like higher operating costs
Yeah.
and potentially smaller loan sizes.
The presentation actually breaks down their performance in each vehicle category.
Oh, cool.
So it shows where they're seeing growth and where they're facing challenges.
Interesting.
And it's clear that they're paying attention to industry trends
Yeah.
and they're adjusting their approach accordingly.
So they're adapting.
Exactly.
That's good.
They're adapting to the growing popularity of used vehicles
Smart.
and the increasing demand for financing in the tractor segment.
That makes sense.
Yeah.
This kind of flexibility is essential,
Yeah.
especially in a sector as cyclical as vehicle finance.
Right.
It's about being able to adapt to changes in consumer demand,
Right.
economic conditions, and technological advancement.
Exactly.
So what about their other loan products?
Okay.
Let's talk about loan against property,
Right.
which is seeing so much growth.
Those impressive growth figures that we saw earlier,
Yeah.
a lot of that's being driven by demand from SME customers.
Right. But as you mentioned earlier, LAP can be risky.
Yeah.
Rising interest rates and potential declines in property values.
Yeah, those are always concerns.
So we need to understand how CIFCL is mitigating these risks.
Absolutely. Now let's move on to their home loans segment.
Okay.
They've been performing very well in this area,
Right.
taking advantage of a market that's still relatively untapped.
Oh.
And they're benefiting from government initiatives to promote affordable housing.
Awesome.
So their strategy here seems to be focused on reaching those underserved populations,
Okay.
particularly in rural areas. It's clear that they're not just chasing profits.
Yeah.
They're also trying to make a positive social impact.
That's an important point.
And it's something that socially conscious investors are increasingly taking into account.
But balancing social impact with profitability can be a delicate act.
Definitely. And finally, let's touch on their newer businesses, SME loans,
Okay.
CSEL and secured business and personal loans.
Got it.
These segments are growing rapidly and contributing significantly to their bottom line.
I'm very intrigued by their foray into the MSME sector.
Yeah.
Small and medium enterprises are really the backbone of the Indian economy, and providing them with access to financing is just crucial for their growth.
It seems like CIFCL is playing an important role in that space.
Yeah, they've created a really diverse portfolio of products and services, strategically positioning themselves across different markets to really maximize their reach and resilience.
But no business operates in a vacuum.
Right.
To understand CIFCL's long-term prospects,
Yeah.
we need to examine how they're funding all this growth.
Exactly. Their funding profile is the next piece of the puzzle we need to solve.
It is.
We've got to figure that out.
Yes, we do. So let's talk about how CIFCL is getting the money to fuel all this growth.
Yeah, their funding profile.
It's a mix of different sources, which
Okay.
is good.
It is good. It spreads out their risk.
Exactly. They're using bank loans, bonds called debentures, short-term debt called commercial paper, and even some borrowing from foreign lenders.
So they have a pretty diversified approach,
Yes, very diversified.
which reduces their reliance on any single source of funding.
Right, and it gives them flexibility.
Yeah, being able to tap into different markets depending on interest rates and conditions.
Exactly. And they have impressive figures when it comes to their capital adequacy.
Oh yeah, what are we looking at?
Their CAR and Tier 1 capital ratio are well above what regulators require.
So they've got a good cushion
Yes, they do.
to protect themselves against unexpected events.
But we need to go beyond just looking at the numbers.
Yeah, we do.
It's important to understand who's lending them money.
Right, and what that tells us about their credibility and risk.
Exactly. So let's start by looking at their shareholder base.
Okay.
The Murugappa Group, their parent company, holds a significant chunk of shares, about 49.93%.
Okay, so a big chunk comes from the family, so to speak.
Yeah, that includes a company called Cholamandalam Financial Holdings Limited with 44.35% and another called Embody Investments Limited with 4.01%.
So having the backing of a financially strong parent company like the Murugappa Group definitely adds to their stability and reputation in the market.
Yes, it's like a vote of confidence.
It is.
But it's not just about family ties.
Right.
They also have a lot of big institutional investors.
Oh, really? Like who?
We see some familiar names domestically like Axis Mutual Fund, SBI Mutual Fund, and HDFC Mutual Fund.
Okay, big players.
And internationally, there are some real heavy hitters. Capital Group, Vanguard, BlackRock, and Norges Bank Investment Management.
Those are some of the largest and most respected investment firms in the world.
They are.
So attracting that kind of institutional investment is a big deal.
Yes, it is.
It suggests that those investors believe in CIFCL's long-term potential.
It's like getting a stamp of approval from the financial experts.
It really is.
But this diverse shareholder base can also create some interesting dynamics.
Oh yeah, how so?
Having such a strong and varied group of shareholders provides stability, access to capital, and potentially valuable strategic guidance.
Okay, all good things.
But it can also lead to pressure to deliver consistent returns
Makes sense.
and align with sometimes conflicting interests of different investor groups.
It's a balancing act.
It is. Now let's shift gears and talk about CIFCL's geographical reach.
Okay.
We mentioned earlier that they have a vast network of 1,577 branches spread across 26 states and 7 union territories.
And remember, they're focusing on Tier 3 to 6 towns.
Right? Those contribute 91% of their business.
That's a strategic decision for sure.
It is to tap into the growth potential of those underserved markets.
It's like they're bridging the gap between urban and rural India,
It's exactly.
bringing financial services to the doorsteps of people who may not have had easy access before.
But serving such a geographically diverse market, especially in less developed areas, must present some unique challenges.
Absolutely. Logistical complexities of operating in remote locations.
Right.
Potential infrastructure limitations, and the varying levels of financial literacy.
All hurdles they have to overcome.
It's really impressive that they've managed to establish such a strong presence across India.
It is, but it's not just about reach.
Right,
It's
yeah.
also about managing risk.
And CIFCL seems to be taking a proactive approach there.
Yes, they highlight in their presentation their robust processes for business continuity and disaster recovery.
This is crucial. Having a solid plan in place to ensure continuity and quick recovery is essential.
They also talk about their use of technology,
Yeah, for credit scoring and customer service.
but also for broader operational efficiency and data security.
It can really help streamline operations, improve decision-making, and enhance their security.
So they're building a more resilient and adaptable business.
Yeah, exactly. And this ties into their focus on ESG principles.
Right, which is becoming increasingly important.
It is. Investors are looking for companies that are operating responsibly and sustainably.
It's about more than just profits these days.
It is.
It's considering their impact on the environment, society, and their own governance practices.
And it seems like CIFCL is taking this seriously,
They are.
integrating it into their business practices.
It's about walking the walk, not just talking the talk.
Exactly. And this commitment to ESG can be a real differentiator,
It can.
attracting investors who want to align their portfolios with their values.
So we've talked about their financials, their
Right.
diverse products and services, their strategic market positioning, their funding profile,
Yes.
their risk management practices, and their commitment to ESG principles.
All pointing to a positive outlook.
They are, but as with any investment, there are risks to consider.
Of course, the economic climate's constantly evolving.
Right. Competition is fierce, and regulatory changes can impact the financial landscape.
So our analysis is just a starting point.
It is.
You, our listener, have the power to take this information, do your own research, and form your own conclusions.
As with any investment, there are risks to consider, uncertainties to navigate, and questions to ask.
But by being informed and thinking critically, you can make investment decisions that align with your financial goals and your values.
So we've talked a lot about their financials and their strategy, but there's another important aspect to consider: their potential impact on society.
Oh yeah, with their focus on financial inclusion, how might CIFCL contribute to broader economic development and social impact in India?
That's a great question. Access to credit can be a powerful tool
You can.
for empowerment and positive change.
When people have access to credit, they can start businesses,
Yeah.
build homes, invest in education, improve their quality of life.
Exactly, and that contributes to economic growth, job creation, and poverty reduction.
And CIFCL, with their presence in rural and semi-urban markets, is well positioned to play a transformative role.
They are driving financial inclusion and empowering individuals and communities.
Their focus on affordable housing, SME financing, and reaching underserved populations is already making a difference.
It's creating a virtuous cycle where economic growth and social impact go hand in hand.
But let's go back to their funding profile for a moment.
Okay.
We need to look a bit deeper at how they're financing their operations.
Right, to assess their long-term sustainability.
Exactly.
So we mentioned their diversified borrowing strategy, but let's break it down further.
Okay.
The biggest chunk of their borrowing comes from bank term loans,
Okay.
followed by debentures, commercial paper, and even some external commercial borrowings.
This mix of funding sources is a good sign.
It is. It shows they're not overly reliant on any single source.
Right.
And they have flexibility in accessing funds.
And their asset liability management strategy is designed to ensure they have enough cash on hand
Yes.
to meet their obligations.
It's all about managing the timing of their cash flows.
ALM is crucial for any financial institution, especially in a volatile economic environment.
It is. It's about being proactive in managing risk, anticipating challenges, and ensuring they have the financial flexibility.
But we can't ignore the current economic climate.
No.
Interest rates are on the rise.
Yeah, and that can affect their cost of borrowing.
Exactly. We also need to be mindful of the risk of liquidity tightening.
So while their diversified funding sources are a positive,
Right.
we need to look closely at the details: the interest rates, the maturity dates, and their overall exposure to interest rate fluctuations and potential liquidity crunches.
It's about looking beyond the surface and understanding the underlying dynamics and potential risks. It's about asking those tough questions.
It's like we're peeling back the layers of an onion, trying to understand how everything works at CIFCL.
It's fascinating.
Their presentation also highlights their processes for business continuity and disaster recovery.
Really important these days.
Yeah.
When you think about the pandemic, natural disasters, cyber attacks.
So many things can disrupt a business.
Right. Having that plan in place
To ensure continuity and quick recovery.
is essential.
They also talk about their use of technology.
Not just for credit scoring and customer service.
Right, but for broader operational efficiency and data security.
Technology is such a powerful tool for managing risk.
It is.
Think about automation, cloud computing, even blockchain.
All those things.
These can help streamline operations, improve their decision-making, and enhance security.
So they're using technology to build a more resilient and adaptable business.
And that ties into their focus on ESG principles.
It does, which, as we've said, is becoming so important for investors.
Absolutely. Investors are looking for companies that are operating responsibly and sustainably.
More than just profits.
Yeah. Considering their impact on the environment, society, and their own governance.
And CIFCL seems to be taking this to heart.
Yeah, they're integrating ESG considerations into their business.
Walking the walk.
It can be a real differentiator for them.
Yeah, attracting investors who want to align their portfolios with their values.
Exactly.
All right, so to sum it all up,
Okay.
we've taken a deep dive into CIFCL's investor presentation.
We have.
We've covered their financial performance, their diverse products and services, their strategic market positioning, their funding profile, their risk management practices, and their commitment to ESG principles.
It's a pretty impressive picture.
It is. We've analyzed the data, connected the dots, and uncovered some interesting insights.
Yeah, a good overview of their operations and growth story.
But this is just a starting point.
Right.
Our listeners have the power to take this information, do their own research, and form their own conclusions.
That's right.
As with any investment, there are risks,
Of course.
uncertainties to navigate, and questions to ask.
But being informed and thinking critically is how you make good investment decisions.
Ones that align with your financial goals and your values.
Exactly.
So keep exploring, keep learning, and keep diving deep into this world of finance.
It's a fascinating world.
It is. Until next time.